So welcome back to the channel. So today we're going to be talking about how we can help you make your first moves into the stock market, man, and truly help you tackle those barriers that we all face when we're beginning out in this beautiful game of the stock market, man. So without further ado, we're going to get straight into it, and make sure you stick around to the end because I'm going to save the best till last. All right, so straight into it, man. So today we've got to break down a few principles and how we can truly, like we said, make that first move on the chessboard into the game of the stock market, man. And firstly, what we've got to do, we're going to need a pen, we're going to need a pad, and we're going to have to write down our whys. We're going to have to break down our reasons as to why we want to get into this game. And those reasons can start with just you wanting to make some more money, start putting your hard-earned money to work, which is amazing, and that's a great place to start. Or we could even go a bit deeper and start working out your later years in life, you know, whether you've got a family now or looking to have a family, are you looking to put them in position financially? Those are your whys, and the clearer you can get on your whys, the clearer you can write your goals down, is truly you making a action. You're actually putting in place the steps. It's always said that a problem written down is already halfway to being solved. So the clearer you can put your goals down onto paper and truly start moving towards the direction of those, that's the first step really getting into this game, is making those clear whys. And that's going to be personal to you. So the clearer you write those goals down, is you truly getting closer to achieving those goals and bringing that freedom life into your current life right now. All right, so that's the first thing that we need to do. Next thing, we need to really have an honest conversation with ourselves and break down what our risk tolerance is. And first and foremost, what I will tell you is that there's no wrong risk tolerance out there. Now, anybody can play the game with whatever risk tolerance they have. Now, you can develop your risk tolerance. Now, you may be very risk adverse, which many of us are by nature. That's understandable. I was exactly the same way. But gradually over time, the more you educate yourself, the more experience you put in the game, the more you play the game, the more risks you start taking. No different to when you first jump on the game of Call of Duty. You know, you may not, it's unfamiliar territory. You know what I'm saying? You're getting killed every 2 minutes, you're respawning, but the more you play, the more experience you gain, the more risks you start taking. Then you go from playing, you know, the regular deathmatch to you start playing Search and Destroy, where the risks are higher, the stakes are higher, but the rewards are higher as well because you've got more experience in the game. All right, so that's the second thing that we need to really have nailed down. And again, like I said, that's very relative to every individual. Everyone's risk tolerance is different, but understand that wherever you start, you can always catapult yourself to a higher level of risk tolerance. All right, now in addition to having those clear goals and your risk tolerance nailed down, we also need to build a portfolio with diversification. So I don't mean having 20-30 stocks in your portfolio. You don't need that many stocks in a portfolio to make money. The more hyper focused you can be, the easier it is to make returns. Now, I'm not saying that you need to put all your portfolio into the technology sector, because that's not diversification. I'm not saying that you can't perform with that, but that's not the most effective way to build out a portfolio. We need to understand there is other industries, there's other sectors in the stock market that we can participate in, and it's earning and learning about those different sectors and how we can play those different sectors to our advantage, because throughout the years, different sectors will perform better. For example, last year, technology wasn't necessarily the leading sector. You know, there's other sectors out there that are really killing the game, and it's understanding and trying to be a part of that wave as well and bring that into your investing game as early as possible. Understanding that not the big name stocks you always hear about on social media or on the news are the only stocks out there. It's half the time the boring businesses that no one's talking about that are really printing the returns. And truthfully, this game is all about a game of returns, because that's what we want to do. So next up, man, why do we need to invest? And the real reason why you need to invest is because everyone deserves to be wealthy, or at the very least financially stable. And investing can provide that, man. There is no other tool out there that can make your money multiply at the rate it does, and that's what investing does. Now, there's various different ways to invest, but today we're talking about the stock market because I'll be real, it's the easiest, the lowest barrier of entry, and the most simple to get into. and it allows you to become an owner immediately just by buying that one share, okay? And there's no other game like that out there. So it's about putting your hard-earned money in position into great assets, into great businesses on the stock market, and allowing them businesses to do the heavy lifting for you, to do the work for you, to bring back you more money. That's what investing is all about. It's putting money in position to print profits for you, okay? Because there's a lot of people that know how to use money, but there's a very few people out there that know how money is to be used. It's a subtle difference, but it's a big change, and it's a big change that will massively change the trajectory of your financial future. So that's why we need to invest. And of course, the obvious one, it will protect us from those inevitable financial pitfalls that are coming our way. Every year, things are getting more expensive. You know, we're feeling the cost pressures, we're feeling the increase in prices, and investing will shield us from those financial burdens that are inevitably priced in to our everyday lives, man. So look, a great way we can get into the game and start making our first moves is in the way of index fund investing. So index funds are a great way to get into the game, get exposure to the best performing businesses in the stock market for a little price. And what that does as well, it limits our risk. It lowers our risk profile, where we get exposure now to not just individual businesses which can go up and down quite abruptly. We get the whole market, we get the whole package for, like we said, a low barrier of entry. And why is that great? Because it now allows us to put our money in position into something that is profitable, something that's going to grow our money over time. We get to earn, but also we get to learn. It's a great way to get in your portfolio in position very quickly, very early. That way you can start now learning the game, learning the rules to the game, learning how to get to that next step, how to make your portfolio even more profitable. It's a great starting point to springboard from. And the great thing about index funds as well, for the most part, you will receive things like dividends, which dividends are simply just that thank you from a business or a fund to say, thank you for holding our stock. So we're going to pay you a piece of our profits in cold hard cash. And if you want to really power that free money, that cold hard cash, to take it to the next level, you can do something that I would subscribe to, and what I advise you to do is to reinvest those dividends, okay? Because it's proven that reinvesting dividends will outperform people who take them out in cash by a long shot, okay? And reinvested dividends are amazing because, one, they're money that you're going to get from the business, like we said, in those profits, but also we can now put those dividends in position and automatically have them reinvested. So as they grow, as they accumulate, they build up, they will now automatically buy us more shares, ultimately giving us more dividends. And as we get more dividends, we buy more shares. It's a great way, and a great way to utilize a way how money is meant to be used. Because remember, money is a tool and it's to be put in position, and money will do exactly what you tell it to do. If you tell money just to go spend, that's all it will do. It will not have the initiative to go bring back more money for you. But if you instruct money, if you put it in position and tell it to print more money for you, and put it in those systems like we said, and use money for how it's meant to be used, it'll bring back more profits for you, man. So that's a great way to really use index funds. And also it just makes it easy, and that's what we want. It makes it automated. It allows us to automate our investments, automatically reinvest those dividends. So it gives us that more time. It gives us our time back to start learning that game, like we said. Start learning how to play at a higher level, how to get more returns. And it's just a beautiful way to put your money in position, man. And also it keeps us accountable, it keeps us consistent, because us as humans, we're what? Let's be real, man. We're not very consistent people as our nature. So this allows us to invest regularly. It gives us a regular basis of investment, and we can now cost average into a lot of these index funds and let it do all the hard work in the background. Let it reinvest automatically for us. We haven't got to do anything for that. We just put the money in the machine, position the money, and let the money do what it does for us, man. So that's a great way to start out, and one of your first moves that you need to be considering when you get into this beautiful game. Now, another way we need to get into the game is we need to start, like we said, once we've established our base and we start learning how to play the index fund game, we need to start researching. We need to start broadening our horizons and start finding winning stocks, because that's truthfully what's going to make the trajectory jump with your portfolios and where you land in your financial freedom futures, man. So finding winning stocks, how do we do that? How do we find winning stocks? So luckily in today's day and age, we've got so much abundance and access to information. So one key component to finding winning stocks that print returns, and probably the most important component, is the way of finding businesses that are profitable. And it's been my superpower. It's definitely a secret sauce that people seem to overlook, especially in this game, which is strange because profit is the oxygen to any business on any level. So businesses that's not profitable and not profitable for a long time traditionally will perform a lot worse than a business that's profitable. So again, with the abundance of information, there's amazing investment sites out there, but just simply, let's keep it very simple now. You can just go to Google and type in the most profitable businesses of said year, and it will give you a list. It will give you a hit list, and now you can take that list and start sieving through it and marking off that list, these businesses, and you can go a little bit deeper with these businesses. Start finding out ones you understand first and look into their product, look into their service. Do they have competitive advantages? Do they have those moats that we always talk about? You know what I'm saying? That impenetrable advantage around the castle, that moat of water what will stop enemies charging the castle. Businesses need to have those things in place. But profit is a great way to determine where a business is headed, okay? So that's a great way to start to find winning stocks. And once we, like we said, find that list of stocks, we can start researching them. And that's when we can find those portfolio printing masterpieces in there, man. So that's one thing you need to do to get into the game after is start researching and finding these great businesses. So next up, we need to be putting our money into the best available vehicles, and that comes in the form of growth investing, okay? Because growth is where we've always been headed, and it's where we continue to be headed. And growth comes in all different shapes and sizes, and different sectors take on the role of what the growth is that year. Now, particularly right now, in the boom of semiconductors, that's where all the growth is, and that's what's leading the stock market, okay? But that isn't always the case. Technology was before that, but prior to that, we had the industrial sector. That was what's really printing the returns. And then we've got healthcare sector. We've got all different sectors, and we need to understand where the growth is, okay? Because I'll be real, this game is a game of returns. We want to put our money in, and when our money comes out, it needs to have grown for us. That's the whole aim of this game, is growing our money. And growth does exactly that. Our money in position for growth is how our portfolios are going to grow. Do not subscribe to the average mentality of just getting 10% a year, because you can do so much more. Again, that is just something that they have told you you're worthy of. We can do 10% in our sleep. Now, I'm not saying that you need to shoot for the stars and put all the risk on the table to make hundreds of percent returns. I'm not saying that. But what I'm saying is just understand, after you've established those basics, established those first moves, like we said, we've got our base, we've got our index funds in place, then we can start researching and venturing out and start understanding that there is great businesses out there that we can print more profits with, and everybody can do that, and everyone's worthy of doing that, okay? So that's important, that we keep growth in mind throughout our journeys to financial freedom, man. Next up, pretty much the opposite to growth is another form of investing, which again, I like to say is a bolt on to your portfolios. It's not something I would probably lead with or completely just do. It's the form of dividend investing, okay? And it links into what we said before. Dividend investing is a great addition. It's a great bolt on because it allows another stream of income. So once you get to that level of growing your portfolio and you've got an abundance of shares, you've got a good amount of shares in said businesses, they will start bringing you back more money. They'll start bringing you more streams of income. And with that income, you can choose to live off that income, or again, like we said before, reinvest it and grow more shares, and eventually get to that point where you have a surplus in there where you can start subsidizing part of your living with that dividend income. So it's a great tool, again, to put money in position to build up to that. But when you're starting out, I think it's important that we focus on those basics first and start compounding our money and putting it into growth to grow the fastest for us. Because the reason dividend investing isn't the best to start with is because for companies to pay dividends, that means that payout comes out of profits, okay? And the higher the dividend yield, the higher the payout ratio equals that less profits are maintained in those businesses. Now, when less profits are maintained in those businesses, that usually means that there isn't a surplus of profits left to keep continuing to grow that said business. So that's why you'll usually find these businesses are well established. They've been around since the dawn of day. They're not fast movers. They don't spike up in price. They don't decline in price heavy. They're kind of intermediate and they trade sideways because a lot of their profits is being given out to investors, shareholders, through the form of dividends. So that's why it's important to bear in mind that dividend investing isn't the most optimal, should I say, investment strategy to start out with. It's definitely something to add on as your journey goes forward, man. So last one, like we said, I'm going to keep the last one the best till last, because it's something that we all can do. It's something that we can all practically do right now if we're not doing this already. And it's in the form of retirement investing, man. Yes. So particularly if you live in the UK, you'll be part of something called a workplace pension. So if you've had a job, you work a full-time job since the year of 2012, you would have automatically been drafted into a auto-enrollment scheme, where a portion of your wage gets paid into a pension for you. And with that as well, your employer will have to pay a portion of your wage in the form of a percentage towards your pension for you. So technically it's free money. That's 100% return on your money, okay? So why is that powerful? Because pensions are directly tied to the stock market, if you didn't know. They're not this pot of gold at the end of the rainbow that you've been saving up throughout your years of employment and at the end you get a cash payout. That's not what a pension is. A pension is directly tied into investment vehicles, okay? And traditionally, most pensions will be into the stock market. Now, we said that you pay a portion into your pension already. Your employer pays a portion into your pension. Those two things can be put on steroids and can be really put in position to benefit you the most going forward. So how do we do that, Ash? So you go to your pension provider, you ring them up, you can get all the details of your pension, and you'll be able to see exactly where your funds, your hard-earned money is being invested currently, and you can see where that is. Now, you can determine where you want to place your money if you're not happy with the returns that you've been given. And I'll give you a little fact. The average pension in the UK is only projected to produce you anywhere between 2 to 3.5% in annual returns after fees. Now, I'll be real, man, that's not going to do anything for anybody in retirement, especially the way costs are going up, inflation's going up, the pressures of living generally, just basic necessities are outweighing those returns. We're paying way more for goods and services than our pensions and our retirements are yielding for us. So this is why we need to take back ownership of our pension, of our hard-earned money, to start printing more profits for us to put ourselves in a better financial position in the futures, man. So that's step one of it. So if you want to take it a next step further and really get the most maximum gain out of your money, the thing you do is you find all your pensions of your previous jobs since 2012 that you worked, you ring them all up, you get the pension information, and now you take all that information, you take all those pensions and you consolidate them into one place. And the way you do that is you put it into a self-invested personal pension. It's called a SIPP. Now you completely have full autonomy of that. You govern that. You take ownership back of all your money. Now you can determine where exactly your hard-earned money is being invested, man. You can choose what funds you go in. You choose what investments, what stocks you want to put it into. And the beauty of a SIPP is you get access to it earlier. You don't have to wait till traditional retirement age, which is about 67 years of age now in the UK, and it will be increasing as we go. A SIPP, you get access from 55. From the age of 55, you get access to your pension fund, your retirement account, okay? And that's powerful. And it's powerful that we can actually make the change in our life financially, because I'll be real, most people are going to continue to work anyway. They're going to continue to work the 9 to 5 for 30, 40 years at a business. And that's fine, that's understandable. But at the end of it, are you going to be compensated adequately for your hard-earned service? And most people are finding that they're not. They're finding that when they get to retirement, it's not what they expected. And that's the key thing you went wrong with. You expected something rather than making the decision to go get the education and take ownership, take responsibility of putting your money in the best financial position you can do, man. And that's something you can practically do, and that's something that everyone needs to look to do, because it is a powerful tool to build wealth and put yourself in a better position, man. So today, man, we broke down a lot of concepts. We broke down how to get into the stock market, how to make your first moves into this beautiful game, man. And I promise you, once you step into this game, once you understand that you can go from being a pawn to whatever position you want to be on the board, man, as long as you play by the rules and you can put it into your own hands, man. You know, you can financially get to that checkmate. It's all in us, it's all available, the information's there. So it's up to you to make that decision whether you want to do that or not, man. But look, I appreciate your time today. It's your boy Ash Assets, as always. Don't forget to like, comment, subscribe, help grow the channel. If you've got any value from this, man, please let me know how I could do better, and share it with someone that you think will get some value from this as well, man. Help the channel grow. This is what it's all about. This information will set people free and set them up in the way that they deserve to be set up, man. Until the next video, appreciate your time. I'll see you in the next one.